Kraft Heinz is one Warren Buffett dividend stock down 39.49% that I think you might regret not buying on this dip here. Of course, Kraft Heinz is in Warren Buffett's portfolio on the latest update February 14. Kraft Heinz consisted 4.43% of Warren Buffett's Berkshire Hathaway portfolio. So certainly there is something in Kraft Heinz stock that Warren Buffett is attracted to. And in this video, I'm going to try and highlight those attractive features of Kraft Heinz stock and why you might regret not buying it on this dip here. So Kraft Heinz offers investors a dividend yield of 4.1%, which is higher than a 10-year government bond. And also, when you invest in a dividend stock, you get the potential for dividend payment increases over time, and you get exposure to a potential increase in the stock price. Now, those things will not always increase over time. They also have the potential to decrease. But when you're investing in a company with good prospects, you can reasonably expect their uh, dividend and stock price to increase over time. That's why we're going to look at these next metrics here to determine if Kraft Heinz has good financial prospects. So looking at Kraft Heinz revenue growth over the last decade, you see a nice explosion in the last year. Revenue increased 10% year over year. This is a result of increasing prices, and this is going on across the board with companies in your grocery store. They've I don't want to say all, but most companies have instituted price increases, and it looks like customers are paying those prices. They're not saying to themselves, no, you know what, that's too much, I'm not going to buy it. In fact, this morning, Procter and Gamble reported its earnings, and it told investors that customers are paying the higher prices that Procter and Gamble is charging. And that's good news if you're considering buying Kraft Heinz stock, because like Kraft Heinz, Procter and Gamble is the premium product, right? Kraft cheese and Heinz ketchup are the premium products. Customers can choose to trade down to store brand ketchup and store brand cheese and other condiments, or they could choose Kraft or Heinz, which is the premium brand. And given that customers are paying up, as evidenced by Procter and Gamble's earnings results, this is good news. Revenue increased 10%, and that could be a tailwind for Kraft Heinz because inflation is persistent. It's proving to be persistent, and that could allow Kraft Heinz to put in more price increases over the rest of this year and maybe even next year. Looking at Kraft Heinz operating profit margin over the trailing 12 months, you see a company with very good profit margins, north of 12% for the last 5 to 6 years, 17.17% in the most recent year. And these price increases that went into place over the last couple of quarters should start to help stabilize this falling operating profit margin. So first, companies experience higher costs. They are slow to raise prices because they're not sure if this inflation will be persistent. And then after they realize, oh, inflation is going to stick around, then they start putting in price increases, and then it starts to stabilize profit margins after initially falling. So if Kraft Heinz follows that same trend, its operating profit margin could stabilize. Nevertheless, 17.17% operating profit margin is a solid profit margin for any business. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. And the final reason why you might regret not buying this Warren Buffett dividend stock on the dip is because of the reasonable valuation. Kraft Heinz stock is not expensive. It's also not cheap. I'm not saying it's cheap. It's not expensive. It's fairly priced. And investors over the long run will experience a nice growth in their wealth if they just buy very good businesses even at fair prices, right? You don't need to always get a very good business at a bargain price to make a good return on your investment. You can make a good return on your investment buying a very good business at a fair value. And I think that's what Kraft Heinz presents investors today, is a very good business at a fair value. All right, so that's all I've got for this video. Thank you so much for watching. I appreciate your viewership, and I hope I'll see you again sometime soon. By the way, I've highlighted a video that's on your screen right now. I think you're going to enjoy that, so please click on that one, and I'll see you over there.